Well, hello and welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. The markets, they're virtually unmoved actually from the start of trade. The Nifty is as flat as can be. The Sensex, well, it's moved mildly into the green, a bit of a recovery from the low point of the day. That's because the Nifty Bank that was trading in the red, that's moved into the green. It's up close to around 80 to around 85 points approximately. I'm your host, Nigel D'Souza, and with me today is Sumaira Abdi. Hey, Sumaira.
Hi, Nigel. Good afternoon to you. So let's get started. First up, let's take you through what's happening in terms of the top stories. It's a flat start to the week on Dalal Street. Keen to see range-bound trade ahead of the Jalan Panel Committee report on RBI's capital reserves. Mid-caps underperform a bit. Nifty Bank flat.
And the auto manufacturers express shock at the proposal to ban 150cc two-wheelers and three-wheelers. Bajaj Auto MD Rajiv Bajaj says he's 200% against the mandatory ban, and TVS Motor Chairman says that the current EV deadline will not undermine Make in India. Sources say the Niti Aayog may now also consider a middle path. That's a CNBC-TV18 exclusive.
Glenmark Pharma falls over 7% after US FDA nod for its nasal spray. Royalties gets delayed, while CG Power rises on news that the company will sell 13 acres of land in Kanjurmarg for 499 crores.
And RBI Deputy Governor Viral Acharya quit 6 months ahead of his term. Tells CNBC-TV18 he has to leave early for unavoidable personal reasons. Experts say his resignation does not come as a surprise.
And the market awaits a crucial Bimal Jalan Committee report later today as the last meeting of the Jalan panel is underway. CNBC-TV18 learns that the report on economic capital framework is likely to carry the Finance Secretary's dissent.
Well, a recovery is what we've seen from the low point of the day. Early this morning, we even went ahead and breached that 11,700 odd mark. So from there, we've seen a bit of a recovery, close to around 40 points approximately. Now the Nifty is holding with a gain of close to around 10 points approximately. So some kind of support and some kind of buying at lower levels. Remember, it's the crucial F&O expiry week as well. So things will get rather volatile in this week. And the low for this series itself has been 11,625 odd. I think ITC is the stock actually that's holding one end up. So that should come up for you on the screen. ITC holding with a gain of around 1%. In otherwise very, very wobbly market. But let's get straight to all the stocks that are moving around in our movers and shakers segment. Let's start off with Piramal. That stock is up close to around 3% after Prashant had broken that CNBC-TV18 exclusive on Friday itself. Prashant, over to you.
Well, highly placed sources tell us that Piramal Group is in talks, very advanced stages of talks, to raise anything between $500 and $750 million. And this amount could actually top $750 million as well. As I said, this is not a deal which is going to take very long to close, should happen fairly soon because the talks are at an advanced stage. Who are the investors? Well, there is SoftBank, which is it seems to be in the lead. There is GIC, and there are other players as well. So these are marquee investors. SoftBank, I think, piques everybody's curiosity because, I mean, they've been in India for the last more than a couple of years. They've put in almost about $10 billion, but most of it has been into tech and startup space. This is, I mean, a large investment like this in the financial services space perhaps could be a first. But there are others as well, GIC and a bunch of others. We don't exactly know where this money is going to come in from. Is it straight away going to come into the holding listed company, which is Piramal Enterprises, which has all these other businesses, financial services, pharma, and a bit of IT? Or is it going to come into a step-down subsidiary of some sort or an SPV? It could be a mix of all these things. The money could come in one shot, or it could be distributed amongst in various tranches, so shots of money at different points in time. But the amounts we're talking about are pretty large. We wrote to the Piramal Group for comments. We wrote to SoftBank. We yet to hear from SoftBank about this. But the Piramal Group, in a response to exchanges with respect to our story, did say that there has been no proposal of this nature which has been brought forth before the board for its approval as of yet. Back to you.
All right, Prashant, thanks very much for that. A whole host of pharma stocks are in focus, and Ekta is here to line them up for us. Ekta.
Well, I'll start with Glenmark, where the US FDA, in fact, has issued a complete response letter, which is basically a response to a new drug application that Glenmark had filed for their nasal spray Ryaltris. Now, remember that the CRL, or the complete response letter issued by the US FDA, cites deficiencies in one of the APIs in the manufacturing facilities. So what this basically does is that it delays the approval of Ryaltris. For example, Macquarie has a neutral rating. They've cut the target price on Glenmark to 555 versus 600 earlier. According to them, the Ryaltris US launch is now likely in the first half of FY21 versus October 2019 earlier. Separately, Lupin is in focus. Credit Suisse has upgraded Lupin to outperform. They've increased the target price to 860 versus 800. According to them, concerns on drugs Solosec ramp up as well as margin contraction has played out. The stock is now ignoring a sharp increase in free cash flow, as well as strong opportunities from drugs such as Enbrel generic in EU, as well as Spiriva generic inhaler in the US. Dr. Reddy's in focus as the company's formulation plant at Dwara was inspected by the US FDA. Remember, at one point in time, it did have a warning letter. It was lifted finally in 2019, but it's received 2 observations. Separately, the company's launched drug in the US, vitamin K, which is approved by the US FDA, small drug, around $46 million in terms of market size. But the reason why Dr. Reddy's is probably under pressure is because Dr. Reddy's is downgraded by IIFL to add from buy. The company's market share, according to them, uptake in Suboxone has been slow. Lastly, Newland Laboratories, one of their facilities, received 5 observations in a US FDA inspection. So that's stock in focus too.
Okay, all right, Ekta, thanks so much for joining in and filling us in with all those details. But let's hop across to Mangalam. He's here to tell us about Emami. Remember, the stock is under pressure today, and from the peak, the stock is halved. Mangalam, over to you.
Absolutely, Nigel, it has been an underperformer. In fact, not just down today. This month, it's lost around 20%, and this year itself down around 35% and that's because of group-level debt concerns and poor financial results as well over the last couple of quarters. But the reason why the stock is in focus today, almost 10% of equity changed hands on both the exchanges. And we learn from sources that it's the promoters who've sold that stake. Remember, this is the second time in the last few months that the promoters have sold 10% stake. On Feb 18th as well, the promoters sold 10% stake to reduce the pledge on the promoter shareholding as well as take care of group level debt. Remember, Emami has businesses other than consumer business. Also, they have infrastructure projects as well as some cement business too. The promoters' pledge right now stands at around 47.7%. So let's see whether this comes off or not. Over the last 2 quarters, the promoter stake has fallen from 72% to now 62%, and in all likelihood, 51%, 52% in the next reporting. So from here on, it will be very interesting to see how the company pans out with regards to its group level debt, because then the leverage or the leeway for the promoters to sell more also reduces as they approach the 51% mark.
Mangalam, thanks very much for that. Anisha, you're tracking CG Power.
Oh, well, yes, Sumera. Hi, good afternoon. CG Power is in focus and is moving higher on account of the fact that the company has signed an agreement to sell the balance of the 13-acre land that they have at Kanjurmarg to a real estate developer for a value of around 500 odd crores. Now, in terms of the valuation, this is bang in line with the market expectation and what the market prices are prevailing in that area. And this might help the company to deleverage the balance sheet, because remember, if you look at the total debt of the company, which is long-term debt plus the short-term debt, that is around 4,500 odd crores. And given the erosion that we have seen in the market cap, this would help the company to aid the balance sheet. Separately, right now on that particular land, there was a transformer facility which contributed around 11% to their revenues, as well as formed around 850 crores to the net worth of the company. They say that as of now, they plan to relocate it and shift it to another location, but this is something that we'll have to track. Separately, the company also announced about the delay in the Q4 reporting. Remember, they still haven't announced a date when they will come out with the Q4 numbers, but they did talk about how they had to pay a fine and how the CFO of the company who had resigned has now agreed to stay on the board till the time these numbers are declared. So maybe that can be just a tad bit of sentiment boost, but the problem remains that the numbers have not been declared. The debt continues to remain high. Almost 100% of the promoter equity is pledged, and then there is a corporate governance issue as well, and all of this has been keeping the stock in check. And also, it's going out of FN expiry just this week.
Wow, thanks so much, Anisha, for filling us in with the 360, details on CG Power. Well, let's Do a quick recap then of all the top buzzing stocks which we just covered. We have Pyramid Enterprises, Glenmark, Lupin, Dr. Reddy's, Newland Laboratories, Imami, and finally, CG Power.
And 48 hours after Niti Aayog asked 2- and 3-wheeler manufacturers to come up with an electric vehicle transition plan in 2 weeks, top OEMs have warned that any hasty move could force the industry to give away the market and its long-term competitiveness to China. Parikshit Luthra, correspondent, now joins in with the details. Hi, Parikshit.
Well, top automakers we've been speaking to over the last 2 days are saying this is a knee-jerk reaction by the Niti Aayog. This proposal to ban 3-wheeler ICE engines by 2023 and 2-wheeler ICE engines under 150cc by 2025 is based on superficial analysis. They're also saying that this is an industry which has taken 20 years to achieve this global reputation, and if we go through it in a hasty manner, we may give up that competitive edge and market to China. They're also saying that this study that the Niti Aayog is asking for in 2 weeks cannot be done overnight, because this is an industry that employs over 1 million people directly or indirectly, has $15 million in sales, and that's why at least 4 months is required to carry out a thorough study. This is what Venu Srinivasan, the chairman of TVS Motors, told CNBC-TV18. He also pointed out that we need to keep the cost factor in mind, that today if you have a motorcycle or a scooter that costs 60 to 65,000 rupees, and tomorrow the same vehicle costs 1,50,000 in electric, how will you convince the consumer to buy such a vehicle? Government sources also concede that there is no clarity and answer to that cost escalation, and how will this be more attractive to the consumer? They're also saying that if you look at the well-to-wheel, that electric may not be greener than petrol, because we will be dependent on carbon-based electricity. Also, Rajiv Bajaj has spoken out, expressing shock over the rationale taken by the Niti Aayog. He's saying that this analysis is based on scant deliberation on employment and also where electricity for all these electric vehicles would come from. He said that he's 100% in favor of all monetary incentives for 2-wheeler and 3-wheeler manufacturers to move to electric, but 200% against any mandatory ban on 2- and 3-wheelers by 2023 and 2025. What the industry is now saying, that go through this in a phased manner, see how electrification happens in some of the key polluted cities in the country by 2025, and then think of a larger pan-India plan based on your experiences. Let's see what happens in the days to come. The Society for Indian Automobile Manufacturers is now planning to carry out a study and submit a report. Let's see whether they ask for more time.
Okay, all right. Thanks so much for that, Parikshit. Well, let's hop across to Ritu Singh. She's getting us an update on Jet Airways. Ritu, over to you.
Well, the corporate insolvency resolution process for Jet Airways has kicked off in full swing. The court, remember, had advised the IRP to expedite the process and not wait until the end of the 180-day period, which ends on the 16th of December, to complete the resolution process. Today, the insolvency resolution professional has published an advertisement inviting claims from all classes of creditors to submit, what dues are owed to them. Do remember, there's now about 8,500 crores of debt that Jet Airways had as of March 2018 to a consortium of lenders, including State Bank of India, Yes Bank, ICICI Bank, among others. But the actual liabilities of the airline, that has been a not-so-transparent area. Players like Ajay Singh from SpiceJet had raised concerns that the actual liability could be upwards of 25,000 crores, something that was keeping away potential players from investing. So clarity emerging on the actual debt position and the liability picture of the airline will be a big respite. 4th of July is the last date for the creditors to send their claims, which will then be compiled by the IRP.
Ritu, thanks very much for that. Let's take a very quick break. Up next, we'll get you a slice of an exclusive chat that we had earlier with Sunil Singhania of Abacus Asset Management on the state of the market and the way ahead. Stay tuned. Half-time report for the market. It's just about flattened out on the Nifty, so just holding with the tad bit of green, and the mid-cap index is in the red for now. But let's talk about the market then. Earlier this morning, we caught up with Sunil Singhania, the founder of Abacus Asset Management, to talk about what he makes of the market along with his top sectoral calls.
Investors are now looking deep into the balance sheet issues. Balance sheet is a very important document because, what you show can be different from what there actually is. And it's a very healthy sign that finally promoters and the companies are getting punished for, I would say, a little bit of deviation, mishaps in balance sheet. And as I said, it's a welcome sign. You will have, for the near term, the investable horizon definitely narrow, because not only the companies which have some issues get punished, but companies which have the slightest doubts of mishaps also will get punished. And I think that is where the opportunity will lie. So as I said earlier, this is a time where scare is overtaking everything. And there would be companies which have no major issues and still the scare is causing their either the stock prices to go down or improving fundamentals to be ignored. And I think that is where the opportunity is. So as an added layer of, I would say, due diligence, we focus definitely on balance sheet and fundamentals, as would most investors be. But we have added a layer of 15, 15, 15. So we are saying that we'll invest in companies which have a 15% or greater ROE, so that the company is generating more than the cost of capital, visibility of at least 15% growth. And at the same time, from a 1 year forward perspective, try and identify companies which are less than 15 PE.
Fair point. I know you won't talk stocks, but your big bets have been some of these chemical companies, some of the holding companies. So let's talk about both these broader issues. Again, holding companies in this environment where the discount is large, why you bullish? And also on chemicals, isn't the large part of the story already over, or you think we still have large room here?
So our bet on the holding company has not worked so far. My view is that we always give less discount to large cap holding companies. Large cap holding companies trade at a discount of 20%. Even internationally, holding companies trade at a discount of 10 to 20%. And some companies like Berkshire Hathaway trade at a premium despite being a holding company. In India, the smaller holding companies trade at a discount of 80 to 90%. So I think the first lesson is that invest in holding companies where the underlying is a company where you're bullish on, so that the value keeps on rising. The other thing is, Anuj, you mentioned about balance sheet issues and how governance is getting tighter. There are now regulations where for any special resolution, the majority of minority have to vote. So I think it's a matter of time before these holding companies get some activist shareholder and ensure that value is created. So our view is that even if the discount doesn't narrow, if your underlying is growing, you will end up making as much money as you make in the underlying. But for some reason, if the discount narrows, that is where you'll have a 2 or a 3 bagger. In terms of chemical companies, I think there is a tailwind. So the way there was a tailwind for pharma a few years back, I think there's a tailwind for chemical companies. Obviously, chemical companies will tend to be more volatile because product prices, unlike pharma, tend to be more volatile. But you have an issue with China's, clampdown on environment. You have US-China trade war issues. You have now Indian chemical companies which are large enough to invest, and a lot of these companies are investing in setting up capacities. So maybe whenever you get an opportunity, in case the prices fall by 10, 15, 20%, I think this is a segment which can, from a 3-4 years perspective, give you very decent returns even from now. So selectively, we will continue to back chemical companies.
It's an interesting thought, Sunil. So chemicals are on your radar. What else in terms of themes excites you? I don't know, for instance, how do you look at tier 2 consumption? I'm not talking about the marquee names, not the HULs of the world, but are you finding any more value and growth visibility in, let's say, slightly smaller consumer companies?
So consumption is going to be a good theme for India. We have 1.3 billion people, 65% less than 35 years of age. Another interesting data point, 20% of all human beings born in the world after 1st January 2000 are Indians. So 1 out of 5 people born in the world after 1st January 2000 are Indians. And they have not even reached 18 years of age. So there's a lot of consumption which is going to happen in India. And we have to just see the Western world and just compare it where India is, and you will see the huge potential that exists.
Okay, then huge potential there in India. That's the word that's coming in from Mr. Sunil Singhania. Well, for the markets on the whole, we're as flat as can be. A couple of stocks are moving lower. Tata Steel has moved to the low point of the day. Later on in the show, we'll try to get you a management to find out how ferrous prices are faring. Remember, the Chinese yuan, that's seen a sharp devaluation or depreciation. and that's what's making imports more viable. So that could be one factor. We're getting into monsoon, that as well is another factor. And demand on the ground is not very, very strong. So put all those factors together, you're seeing some selling in terms of some of these metal names. Britannia, last week the stock was down close to around 5%. Today as well, the stock is seeing some selling. So that's one of the blue chip names, or strong FMCG names that got 45, 50 times valuations. Now, in fact, some of them are coming off the top. For the time being, let's slip into a short break. You come back and we'll get you some trading ideas with Ashwini Gujral and Prakash Kaba. Stay with us. European markets to open up for the time being. Let's get it in some global opinion. Bob Dahl of Nuven says that he does not expect the hike in oil prices to be good for the global economy. Let's listen in.
We know supply has come from lots of places, but if there's some disruption because of war, then all bets are off and we'll see higher oil, and that will not be good for the economies of the globe. Again, probability is small, but it's there. Global GDP is struggling to advance. It's just continues to slow in lots of places, and that puts a damper, and then you get the excess supply from places like the United States, and that just puts a lid on prices. I think that as of last meeting, if not expectations before, the chances of a cut in July are much higher than not. After that, I think we're going to have to watch the data. Let's put it this way: if the Fed does cut rates 3 times, that tells me the economy is not as good as we think, and it tells me we're going to get more earnings disappointment. So as an equity guy, I sure hope they don't have to do more than one. This is the 4th time in 18 months the S&P 500 is touched 2950. And the first 3 times, at least, it kind of fell off. My guess it will do the same. Everybody's expecting China and the U.S. eventually going to come together. Everybody expected the Fed to become more dovish. So I think last week's Fed meeting and Draghi's comments were just lining up with what the market expected already. And as a result of that, I think we're probably going to get some sloppiness. The market is paying attention to the Fed and the positive developments with U.S.-China. Remember, a week ago, 2 weeks ago, they weren't going to talk. Now they're at least talking, and of course I think the positive is that teams are meeting prior to the 2 of them having their side meeting. It actually is the meeting for the G20, as you know. So I think that's what the market's focusing on, and maybe been a little Pollyannish. There's some issues we need to worry about. We're going to get forward guidance, and because of the trade issues with China, there's so many companies working on their supply lines to figure out how do we avoid China. And that takes their eye off the growth ball when they're trying to do these other things. So I think we're going to get mediocre second quarter.
All right, with that, let's shift focus then to the technicals of trade. Ashwini Gujral and Prakash Gaba join in now. Gentlemen, good afternoon to both of you. We're off of the lows for now, but over the last half hour, it looks like we're just in that very, very tight range. So what happens from here on? Ashwini, first to you on the index, what do you see?
See, there is a lot of short covering in the financials, including housing finance, PSU banks, even private banks. So my sense is that we should soon get to days high on the bank Nifty, and chances are you will have the second half of the day which could really take the Nifty as well as bank Nifty much higher. You have TCS, Infosys, which are moving higher. So that way, right now is a good time to get long on bank Nifty and its constituents. Also the Nifty, my sense is that Nifty should easily get past this 11,775, 780. So right now is a time to participate in this short covering. Having said that, India Bulls housing is a buy with a stop of 610, target of 635. SBI is a buy with a stop of 348, target of 364. And HDFC Bank is a buy with a stop of 2410, target of 2475.
Okay, Ashwini is playing for a bit of a bounce from these levels. He believes that the Nifty can give you a bit of a bounce, maybe 40-45 points higher from here is what you can look to get. So Ashwini's trade is go long on the Nifty, and he's given us his individual picks as well. Prakash, tell us, what would you do on the Nifty as well as the Nifty Bank, and your picks as well for today?
Looks like the Nifty is trapped. Is refusing to give a direction. Perhaps in the later part of the trading session we could see direction, because so far it looks very much trapped. I'll rather go stock wise. I'll stay out of Nifty and Bank Nifty. BEL looks like a buy. Perhaps we can see an up move to around 120 zones. Stop below 112 on BEL should be fine. I also like State Bank of India. Possible target on the upside is 360. Stop below 350.
Okay, all right. Then thanks so much for that, Prakash. I don't know whether we still have Ashwini with us. Ashwini, wanted your call on a couple of these pharma names. They are buzzing around in today's trading session. Glenmark Pharma is now down close to around 7.5%. It's, for this month itself, it's been struggling a tad bit. It's down 15%. And for the year itself as well, it's down more than 30%. Is there any kind of support on some of these pharma names, or would you just avoid the trade out here?
Glenmark is trading way below its 200-day moving average. So, once a stock is trading way below its 200 moving average, it tends to weaken and bad news just keeps coming. So, I would avoid Glenmark.
Okay, Ashwini, thanks very much for that. Prakash, thanks to you as well for your trading ideas. Let's quickly take a check on what's happening in the European markets. Remember, the US markets have closed off with quite handsome gains over there, not just on Friday, but for the entire week. And today, this morning in Europe, the indices are opening just about on that flattish note. So I suppose there are still a lot of triggers, Nigel, for global investors to actually sort of get their head around. There's of course a G20 summit as well, which will be quite critical given the way the US-China trade relations look to pan out. And of course, there was a stock alert as well. DHFL looks like it's having a fabulous day, at least for today. So that stock has suddenly shot up. But we'll take a very quick break. Up next, graphite prices have seen continuous slide. We'll talk about the impact with R.K. Goyal, the MD of Kalyani Steel, as well as Balchandra Shinde of Anand Rathi on the other side. Stay tuned. Watching Halftime Report. Let's talk about the graphite prices and the impact thereof. Now, graphite prices themselves have seen a continuous slide. To discuss the impact and the outlook going ahead, joining in R.K. Goyal, the MD of Kalyani Steel. Mr. Goyal, good afternoon, sir. Thanks very much for speaking with us. To begin with, could you confirm for us if indeed prices have seen this kind of correction and what they stand at currently compared with the last quarter?
You see, current prices of graphite electrode from China is around $2,700 for HP grade and around $8,000 for UHP grade of diameter 600 and above. Same in the UHP grade, 450 dia is around $4,500. Now, if you talk of the domestic prices, they are almost 15 to 20% higher in the HP grade. And in UHP grade, they are around 6,50,000 rupees per metric ton, which is matching with the international price for 600 dia, but they are definitely higher in 450 dia.
All right. So, Mr. Goyal, just to confirm, we have a Kotak Securities note that stated that for non-UHP, the prices are sub $3,000 per ton. And in terms of UHP, those prices are at around $8,000 on a per ton basis. So, as per your checks, you're telling us that the non-UHP is $2,700 per ton, right?
That's right.
And in terms of UHP, you said the prices were at?
For 600 dia, it is around $8,000 plus.
Okay, $8,000 plus. So in that range of around $8,000 to $8,200 per ton?
$8,000 to $8,500 depending on the supplier.
Okay, all right. And the more important point is you're telling us that the non-UHP that's available in China at a sharp discount of around 20% in comparison to what our domestic producers are selling it at.
That's true, but we have to keep in mind around 2 years back, when before this price increase started, the price of HP grade electrodes was around less than $2,000, and in terms of Indian rupees, it was around 1,25,000 to 1,35,000 rupees per metric ton, which is still almost double as compared to the old prices in the domestic market. As far as prices from China, they are still 30 to 40% higher.
Okay. Mr. Goel, therefore, are you buying graphite electrodes now, or are you delaying the purchase?
We are definitely buying graphite electrodes from domestic sources as well as from China.
Okay, what we were trying to get at, Mr. Goel, is are you waiting by for prices to correct even more from this? You'll be using the non-UHP, right?
You see, we use only HP grade, and we are a manufacturer. We cannot keep on waiting for buying the electrodes because prices are going down.
Right.
We consume every month. We buy whatever we require every month.
So you're not waiting by. But I wanted to understand what kind of graphite electrodes are you buying? Do you buy the non-UHP or you buy the UHP?
We buy non-UHP.
Non-UHP. Okay. And you're saying that as of now, you're not waiting by. You're going ahead and you're you're buying from the open market because that's your need, right?
Yes.
Okay, let's. So that's about graphite electrodes. We wanted to call you and ask you about that because some of these, HEG and Graphite India, both the big producers in India, they've seen a sharp correction. We wanted an outlook on the prices. Let's shift focus to the ferrous industry then. Let's talk about pricing. What are the current prices of steel, and compare those prices with the average of Q4 FY19.
You see, as far as the Kalyani steel is concerned, we can talk about specialty steel long products, largely used in automobiles. Currently, because there is a slump in auto industry, there is definitely pressure on the pricing, and we had to reduce our prices by almost 2,900 rupees per metric ton, starting from 1st of April.
From 1st of April, okay. And so this would be at least a 5-6% correction?
It is close to 6%, that's right.
6% correction. And do you expect more pressure? Because, we have been covering all through the day and all through the last few weeks as well, that automakers, they're under big pressure. And if you have some exposure out there, then there could be a scenario that will play out where there'll be more bargaining that will come about. Do you expect prices to correct even more from here?
Our costs have not gone down much.
Yes.
Like whether you talk about coking coal, coke, iron ore, rather iron ore prices have gone up substantially. Electricity prices are increasing. Wages are increasing.
Yeah.
So our costs are increasing. This 6% is an impact directly hit on our profitability.
Okay.
So I don't think that we are in a position to reduce the prices any further.
Okay.
We would expect that this will continue for at least another 6 months.
But the Chinese are giving you a run for your money, right? Because the Chinese currency has depreciated, so imports are coming more into the country. What is the current pricing difference between the domestic prices as well as imported steel?
You see, we don't find any rationality in prices of Chinese producers. They can sell any price, and there is no rationality with the cost and all. So it's very difficult to say what price. Sometimes they ask for $700, sometimes they can sell at even $500. So in fact, this dumping needs to be controlled.
Okay. All right. Mr. Goel, thanks so much for joining in. We'll touch base with you later this month and hope that there is some protection that comes for the ferrous industry. But let's address those flashes that are up for you on the screen. Sapna Das joins in to fill us in and update us on that. Sapna, over to you.
Hi, Nigel. So basically, this is another further development on the Economic Capital Framework recommendations which have been under discussion right since January. In this panel, a very high-level panel headed by Dr. Bimal Jalan. So first off, a while ago we had this fact that there's every possibility of putting our government dissented on some of these recommendations. They are now given to understand that the recommendations are not yet final. The report is not yet final. The panel is going to meet yet again in the month of July. I suppose this is the third time that the panel will be kind of delaying or rather postponing the submission of its recommendations. And very clearly the difference of opinion that has emerged within the panel, I suppose there is some degree of work on that to try and sort out those differences. That is why more time is being sought. we have been told that some recalculations, quote unquote, are required on whatever the panel is likely to suggest. And my gut feel is this, that basically there's going to be a new formula that will be worked out in terms of how the sharing of RBI reserves needs to be undertaken. What's the roadmap on that? Whether it's a 3-year, 5-year, how will the money come about? If it's a longer-term formula, obviously it's going to happen in tranches. Does it need a recalculation of the way the government seeks dividends from Reserve Bank of India, in the sense they have an annual target and they also have something that comes up in the month of Jan, just before they, or rather in the month of March, also they receive something additional before the close of financial year. So on and so forth. So recalculations are being worked out. That's the reason for the further delay in the recommendation of Jalan panel. Very unlikely that this coming budget will have any kind of a projection of what we can expect on this. Also, as part of the given procedure, let me point out that whatever is finally decided or recommended by the panel has to be vetted by the RBI board. And obviously, RBI board also has government representatives. The banking secretary and the DA secretary, both are part of the Reserve Bank of India board. So all of these things have to be kept in mind. There is no clear takeaway as of now as to what is the number that is being worked out and what is going to move forward. But definitely the dissent expressed by the Finance Secretary, Mr. Price, is what we need to understand. Probably that is now, casting a shadow on the panel moving, kind of tying up its consensus and, giving over its recommendations to RBI board. That is probably going to come in. And they're trying to work that out. This is what we are given to understand. So,
Sapna, okay, I think we lost that connection with Sapna. But anyway, the important takeaway, of course, being that the findings of the panel, it looks like there's going to be a further delay, and only post-budget is when we'll probably know some things. What Sapna has been telling us, that some more recalculations are being done right now, and that the differences, which have arisen in terms of this ECF framework, those need to be resolved. So probably in a bit we'll know a little bit more about that. But let's get back to talking about our discussion on the graphite electrode prices. Anand Rati's Balachandra Shande is also with us. Mr. Shinde, good afternoon. Thanks very much, and apologies for that slight delay. We've been hearing that graphite electrode prices have been correcting, as well as stocks are down 60-70% odd. And this is something that the management of Kalyani Street as well has confirmed to us. Could you give us your take on the sector now going ahead, as well as the two stocks, that's Graphite India and HEG?
The graphite electrode prices have already corrected to around $10,000 a ton. And the scenario, especially in India and globally, also has changed related to graphite electrode prices. Especially in India, like Iran sanctions are there, then import duty has gone away. So Chinese imports are available at around $9,000 a ton. So there is likely to continue with the graphite electrode prices pressure will continue over next 1 year at least. And what we believe is as far as needle coke doesn't comes down and settles down at a suitable level, graphite electrode prices will continue to remain under pressure. So that phenomenon will take at least a year to happen. Post that, probably we may see some softening in the graphite electrode prices.
All right. So, Balchandra, you're expecting prices to remain under pressure for the next 1 year odd. But what would you do with both these two stocks? As my colleague Sumera said, both of them are down 60 to around 70%. Do you believe that they become attractive at some point of time? And what kind of returns can they give?
They are attractive at current prices, considering the cash on the book and they are almost at the book value level. So probably it is at attractive levels, but it won't give the expected returns because of the graphite electrode prices. Decline will continue over next 1 year. And unless and until graphite electrode prices settles down at a particular level, we don't see stocks giving a good return.
Okay, stability in terms of pricing, that will be key, to reverse that view and to get constructive on both these two stocks. But, do you have official coverage on both these two stocks? If yes, could you tell us what is your current rating on them?
I have official coverage on Graphite India. We have a hold on it. So we'll continue to maintain a hold. Probably will revive the rating once we see that Graphite Electrode prices set. Target price is around 418.
Okay, Balchandra, thanks very much for joining in with that quick take. For now, we'll take a very quick break. Up next, we'll talk about the commodities space. T. Gyanshekhar of Comtrends Research and Manisha Gupta will join in. Stay tuned. Like it's quite steady for now and quiet, but the mid-cap index is now seeing cuts which are getting accelerated. So now about 0.25% down on that index. But let's find out what's happening in the world of commodity. Manisha Gupta is here with a quick roundup. Manisha.
Thank you so much for that, Sumaira. I think it's really about the global cues which seem to be impacting all the commodities. It is going to be the G20 summit in next week, and that really seems to be calling shots for the base metal prices, where we have seen some support because of that. The macro, data seems to be improving slightly. It is about the US PMI index numbers, which did not come in so positive. That seems to be checking the prices on the higher side. But apart from that, the copper has been trading firm because of the Codelco Chile mine, where the strike has entered for an 8th day today. You also have seen strength continue for the nickel prices, where we are looking at a deficit. And since the metal has been oversold, there has been those buying opportunities that continue to creep onto that one. So these couple of metals actually have done well. Others, I'm assuming, will still want to wait on what the US dollar does, what does the US Fed does in the next meeting, and also how the G20 summit comes across. Joining us now is T. Gyanshekhar of Comtrends to talk about that and strategies in that space. Gyanshekhar, hi. First of all, what are you expecting in sense of the G20 summit? How much of importance are you attaching to it? And ahead of that, how are you playing your base metal sector?
Yeah, I think the base metal sector is the one which is going to notice the changes from the G20 talks, because it's been quite hyped, and the markets as a whole has built in some hope that there could be something in it. My feeling is, if that doesn't happen, if no positive news emerges, there could be another round of sell-off in base metals. But, it all depends how the news flows emerge. So at this point in time in base metals, I'm still looking to buy on dips, because the technical price structure is hinting that there is some kind of an intermediate bottom. So copper and nickel both look okay, but zinc is not, because to some reason, it's been sold off heavily. So selectively, copper and nickel are looking okay to buy on dips as of now.
Sure. How also are you looking at the gold and silver prices? More gold than silver, because this one really has run up quite strongly. 8% up from the kind of lows that we saw in the last 1 month. Quite clearly has been on the buying spree. The fundamentals seem strong. The global scenario seems supportive of gold. But at these levels, are you still issuing a buy call?
Absolutely. I think at these levels, no, because, we are expecting some kind of a mild correction to happen, because the technical readings are all completely overbought. Okay. So it's better to look for a dip to buy in at these levels. But overall, we still look, to buy it on any dips from here. We have targets of close to 1450 or thereabouts, which in Indian rupee terms would come somewhere slightly above 35,000 on the upside.
And before we let you go, what's your sense also on the crude oil prices now, with the US threatening of more harsher, significant sanctions on Iran yet again today? We, of course, have seen the premium build up in crude prices, but how are you reading with those statements and the kind of data?
I think the market is more or less priced in to some extent. Yes, it's a significant news event, but to me, $60 in NYMEX and 67, 68 in Brent is going to be toppish. The market has more or less factored all these factors, and I think there could be a fall from there, or some positive news that's going to come, which could again bring prices lower. So I'm not extremely bullish in crude. I'm rather cautious and looking for more signs of it to fall from these levels.
All right, Ghanshekhar, Manisha, thanks very much for joining in with those quick trades. For now, we'll take a quick break. Up next, RBI Deputy Governor Viral Acharya has quit 6 months ahead of the end of his term. So details on why he's quit and what happens to the MPC now lined up next. Stay tuned. Red on the frontline indices as well, and the mid-cap index seeing a cut of about 0.3%. But the important news today has been that the Reserve Bank Deputy Governor Viral Acharya has quit 6 months ahead of the end of his term. So Ekta Batra now joins in with the detailed analysis of what his resignation means for the MPC. Ekta.
Well, thanks for that. RBI Deputy Governor Viral Acharya quit 6 months ahead of his term. Well, CNBC-TV18 has, and he's told CNBC-TV18 as well as the RBI that it is for unavoidable personal reasons, the reason why he's quit. According to economists such as Nomura, at the margin, the composition of the Monetary Policy Committee will likely become incrementally more dovish than this, as Dr. Acharya stood on the more hawkish side of the policy spectrum. Well, let's get you a bit of a history of how Dr. Acharya has voted in the past to give rise to this assumption. Dr. Viral Acharya was appointed Deputy Governor of the RBI in December 2016. The first policy Dr. Acharya was a part of was in Feb 2017 and has since been a part of 15 monetary policy committees. He was a part of 3 policies with Shaktikanta Das as RBI Governor and the remaining 12 with Dr. Urjit Patel. The remaining members of the MPC besides the Governor and Dr. Viral Acharya is RBI ED Michael Patra, Dr. Ravindra Dholakia, Dr. Pami Dua and Dr. Chetan Khate. In the 15 policies that Dr. Viral Acharya has been a part of, he has voted only twice for a rate cut. The first was in August 2017 when Dr. Viral Acharya, along with 3 other members, voted for a 25 basis rate cut to 6%, and the latest in the June 2000 policy where he voted unanimously along with the other 5 members to cut rates by 25 basis points. The latest minutes, in fact, of the June policy reflect on Dr. Viral Acharya's hesitation on voting for the rate cut, where he guided for risks from inflation risks, fiscal slippage and the importance of the upcoming union budget. Dr. Viral Acharya's cautiousness is also reflected in the past 2 policies of 2019, where both in Feb and April 2019, Dr. Viral Acharya voted along with Dr. Chetan Khate against a 25 basis points rate cut, while 4 other MPC members, including the Governor, voted for it. And while Dr. Viral Acharya's replacement is still not known, the view is that with Dr. Acharya gone, the MPC committee will definitely get a more dovish tilt, with even previously hawkish members such as Dr. Michael Patra having turned more dovish.
On that note, let's hear out what experts are making of this move by Deputy Governor Viral Acharya to resign.
After his speech in October, I believe, where he warned of dire consequences for the central bank if or for India if its independence of the central bank was threatened, I think this resignation was well expected, and it's not really that much of a surprise. I don't see any reason why the market should be much affected by this resignation.
Timing is a bit of a surprise, to be honest. There was speculation that he would leave immediately after Dr. Patel left. He was always seen as a dissenting voice. Unfortunately, this might be seen as a bit of a question mark on the independence of RBI. But the institution is big enough, the country is big enough, we will move on, I guess. This will create some nervousness amongst foreign investors. But then even with Governor Patel himself resigning, the much expected impact on markets didn't really accrue. So while we will be seeing some medium-term discussions about what this means for RBI independence and all of that, I think in the short run we'll probably just get by and focus more on things like the budget itself and the implications for monetary policy.